It's kind of like when I started in this industry 35 years ago, the Fed used to publish, or the Bureau of Labor Statistics and the Fed used to publish something called M3, which was the broadest measure of the money supply. And under Bernanke, he got rid of it, saying it was an archaic number that no longer needed to be published. It wasn't significant. But what that was the ability to measure the amount of money that was entering the system. And of course, for convenience reasons, they cite it was too costly, no one used it anymore. The Vancouver Agora Conference, which has subsequently been changed to the Rule Conference. Mm-hmm. And there's a man named Dmitry Speck. And Dmitry Speck is a brilliant. And Dmitry took a chart of 10 years worth of market movement and condensed it into one chart. And what he would show would be the AM and the PM fix, and all of that movement over 10 years worth of trading into one chart. And what you saw when you looked at that chart was truly breathtaking. And I could probably dig that up maybe for the next time we talk. And that is simply that it would go like this. AM fix, bang, creep back up. PM fix, bang, and PM fix as you're heading into New York. These two waterfall events, and then as you hit New York, it would slowly rise in through Asia, hit the UK again, and bang, and bang. And that's not how markets work. And I think it's been the stated, I think, mission of those bankers to suppress the price using the AM and the PM fix, and largely as it heads into New York with one arm tied behind its back. So that doesn't surprise me at all. And again, it speaks to more desperation. When you have a market that's trading 200 million ounces of gold per day with like 10 times less gold behind it, and as much as over 3 billion ounces per day, almost 4 times global mine supply annual per day, with a float 12 times less than it's there, you want to do all you can to blur. And it's the same reason that they lie to us about inflation and full employment. These are the metrics that the Federal Reserve is supposed to do policy on. And if you're trying to base your policy and your indebtedness off of low interest rates and stable employment, you're going to lie about it. Well, the same thing is true here. And again, it's just the realization, the sad realization that the people playing the markets, I guess I'll just simply go to what Chris Powell, and we all owe Chris Powell and Bill Murphy a debt of gratitude. I don't say it enough. Those two gentlemen who started GATA, Gold Antitrust Action Committee, and Chris is famous for saying there are no free markets anymore, just manipulations. Well, the same is true with information. And we see that coming out of the Bureau of Labor Statistics. Now we see it coming out of the Bank of England. It's just more of the same. So I think this is where I've come up with the statement, you have to trust your gut. You can see it, you can feel it, doesn't matter what the numbers say. They're caught and they're afraid. And that's why the Bank of England, or the European Union, the European Central Bank, has come out and said that the gold demand, the gold market, is actually a threat to the entire global financial system. Well, that's right, it is, because you have massive amount of contracts that are standing behind just a little bit of gold, or the other way around, a little bit of gold and silver standing behind a massive number of contracts that are now standing for delivery. This is what he's talking about. It's another way of saying, yeah, we got caught with our hand in the cookie jar. And so they're going to do all they can to blur that information from anyone who's trying to figure out a strategy.
Well, here we are again, standing right in the middle of the financial storm that most people still pretend isn't even happening. And I've got to say, it's amazing how much denial there is, how many folks are still clinging to the narrative that everything is fine, the dollar is strong, the Fed has it under control, and the stock market is going to levitate forever because it just always has. Look, I've been doing this for 35 years. I've watched this game evolve. I've seen the manipulation, the paper schemes, the phony CPI numbers, the jobs reports that don't pass the laugh test. And I've watched regular people get absolutely crushed by believing what they're told instead of what they can see with their own eyes. And believe me, the people running this game, they know exactly what they're doing. They want confusion. They want you so disoriented by volatility, so exhausted by the contradictions, that you just give up trying to figure it out. That's exactly how they keep the masses out of the only assets that actually protect you when it all goes sideways. Let me take you back a bit. When I first started in this business, the Fed and the Bureau of Labor Statistics still published something called M3. That was the broadest measure of the money supply. It told you how much actual currency was sloshing around the system. You want to know why they stopped reporting it? Bernanke decided it was archaic, that it didn't matter anymore. Too costly, nobody used it. That was the excuse. The truth, it was inconvenient. It made it too easy to see how fast they were debasing the currency. Can't have that. It's the same reason they keep manipulating the CPI, using hedonic adjustments and substitution to make it look like your grocery bill is only rising 3.2% a year, when you and I both know it's more like 15%. It's the same game. Always keep the public off balance. Always keep the inflation expectations anchored, even if it means outright fabrication. Now, you want to see the clearest evidence of how rigged the precious metals market is? Go look up the work of Dmitry Speck. Brilliant guy. He compressed 10 years of gold market data into a single day-long chart showing how prices moved on average. And what did it show? Exactly what you'd expect if you've been paying attention. Bang! AM fix hits in London. Price gets smashed. Creep back up. PM fix hits. Bang! Smashed again, heading into New York. This happened with such eerie consistency over a decade that you'd think it was scripted. Because it was. It's right there in front of you. This isn't tinfoil hat stuff. These guys have been suppressing gold and silver for decades because it's the only way to keep the entire fiat house of cards from collapsing prematurely. The Bank of England's even admitted it in their own documents. The European Central Bank said it outright. The gold market is a direct threat to the stability of the global financial system. Of course it is, because gold is the mirror that reflects the rot in their currencies. But here's the thing, the desperation is getting more obvious. The games are getting bigger and sloppier. You've got 200 million ounces of gold trading in paper every single day. 10 times less physical gold behind it than that would imply. You've got over 3 billion ounces of paper silver trading daily, which is almost 4 times the entire annual global mining supply per day. And the float behind it is maybe 1/12 of that. How long can they keep this going? As long as they keep people believing. As long as volatility scares the average investor away. As long as they can keep rewriting the rules, introducing cash settlement instead of delivery, stretching out LBMA T+1 settlement into 8 weeks because, well, they can't find the trucks or the manpower to move your bars. Give me a break, but it's starting to slip. That's what you have to see. That's why we're getting these moments of extreme volatility. Jeff Clark wrote years ago, and he did the math going all the way back through history, bull markets get nastiest right before they get explosive. They shake people out. They ramp up the volatility inside a range, so you never get comfortable. They wear you down emotionally, so when the real move starts, you're sitting on the sidelines, shell-shocked, telling yourself, it's too late now. Look at what's happening. Since Trump was elected, over 820 tons of gold have stood for delivery on COMEX. Almost 9,000 tons of silver. These are numbers that blow away any historical period. And it's not little retail guys doing this. It's not gold bugs ordering monster boxes of eagles. This is big money. This is sovereign wealth, central banks, family offices that can buy entire vaults.
Yeah, I think volatility is a tool of the cartel. Volatility within a range is what they've been using forever. They use things like volatility. They use things like counterintuitiveness. As an example, everyone would have thought that the stock market should have got its rear end kicked and gold and silver and Bitcoin and oil should have gone straight to the moon during the acceleration of the bombing between Iran and Israel, and of course it did the opposite. But going back to the Gulf War, when I don't know how many years ago the original Gulf War was, was probably right at the very beginning of my career. It had to have been close to 30 years ago, if not longer. The exact same thing happened. They delinked the rationale that people use to run to these assets. Whenever we would expect it to move in one direction, typically it goes the other, and this is part of the ploy that they use. But volatility is another. They use volatility within a range to keep people on the sidelines and to delink the rationale that we've all grown up into believing that gold and silver are tools or safe haven tools to protect our wealth and our finances in periods of uncertainty and chaos. Well, that's cartel 101. But yeah, I would expect, and Jeff Clark did a great piece many years ago where he talked about, and he went back and looked at all sorts of markets throughout all sorts of history, And the common theme was that as markets reach a blow-off stage, as they really accelerate, you see much greater volatility. And the easy way of saying that, then again, is that the bull wants to take as few people along for the ride as possible. If it were that easy, well, everyone would be wealthy. And it's not that easy. But this is even bigger. This is a changing of the guards. This is a reorganization of the global monetary system. And there are players that don't want this to happen, and certainly don't want to make it easy. So yes, I would expect greater volatility, but within a range. And that's kind of what we've seen. Great volatility in gold and silver, but within a range, and lately, higher lows and higher highs. So all very bullish to me and all to be expected. And no one should expect this to be easy. We're talking a monumental shift away from, basically a new monetary system that if anyone would expect that to be easy, I think they're fooling themselves. So yes, greater volatility is absolutely something we should expect to see. And when that happens, it's better just to shut off your computer, don't look at your phone, go outside and do something, come back a few days later.
So let's keep peeling this onion, because the truth is, we're living through the most profound monetary shift of our lifetimes, probably of the last 100 years. And most people are sleepwalking through it. They're out there debating politics on social media, arguing over who should be president. Meanwhile, the very foundation beneath their feet, the dollar, is crumbling. And the funny thing is, they won't know until it's too late. That's how these things always go. Look, the people running this game know exactly how fragile it is. Why else would they be so desperate to maintain appearances? Why else would they keep throwing 350 million ounces of paper silver a day at the market just to keep the price under $37? I used to think this was just a game about greed, about making money on the short side. Now I realize it's about survival. Because if these prices ever reflected real supply and demand, the entire financial apparatus tied to derivatives would implode. You've got roughly 960 million ounces of silver short interest on COMEX right now. That's basically a year's global mining supply. And yet here they are, day after day, selling contracts they can't possibly cover if enough people stand for delivery. That's why you're seeing the same script play out every options expiration, every end of quarter. They hammer prices to make sure calls expire worthless, to keep these derivatives from blowing up. And it works until it doesn't. Because here's the dirty little secret. Someone else is playing the game now. The Chinese, the Russians, the Saudis. They're not dumb. They watch us use the COMEX and LBMA to suppress prices, and they say, fine, we'll take it at your discount. Keep running that paper game. We'll stand for delivery. Eric Jung, King Kong on Twitter, nailed it when he said, the Chinese are buying every ounce that's not nailed down, using the West's own system to subsidize their stockpiles. They're accumulating undercover, taking delivery through backdoor channels, using doré and concentrate to bypass transparent markets, so nobody knows just how much they actually have. That's strategic genius. Meanwhile, here in the West, the COMEX is getting hollowed out. Sure, the open interest looks big, but it's just chips on a casino table. The real physical is getting drained out by people who understand this game ends when confidence ends. Let me give you a practical example. We keep hearing stories about the LBMA pushing out settlements to 8 weeks. Think about that. The LBMA is a T+1 market. You trade today, you get your bars tomorrow. That's the deal. Except suddenly it's T+8 weeks because apparently they can't find the trucks or manpower to deliver your gold and silver. Really? The Bank of England can't hire a couple drivers? Give me a break. It's the same song we've seen in every other endgame. In 1968, when the London gold pool collapsed, they went from confidently controlling the price at $35 an ounce to completely losing the peg almost overnight. You know what the common investor thought back then? It'll stabilize, it always does. Right up until it didn't. Gold went to $850 in 12 years. That's the blueprint, except this time it's global, and the stakes are even bigger. Let's pivot to the BRICS for a second, because I still see so many analysts laughing them off. They say, oh, come on, these guys are all rivals. They're all corrupt. They'll never replace the dollar. Wrong. They don't need to replace the dollar as the global reserve. They just need to give the rest of the world an option. That's it. And they're doing it. Sergei Lavrov straight up told us Their new cross-border settlement system, the BRICS Bridge, will be offered to non-BRICS nations. That means Belt and Road countries, the Eurasian Economic Union, the Shanghai Cooperation Organization. You add that up. That's the majority of humanity, the bulk of global GDP, nearly all the commodity supply chains. And they're building a settlement system that bypasses SWIFT, bypasses dollar correspondent banks, and eventually will be backed by gold or other hard assets. So what happens when the Philippines or Vietnam or Egypt decides to settle oil or wheat in a BRICS currency? What happens when they start holding gold as reserves instead of treasuries? You think they're coming back? Once they've built the pipes to settle outside the dollar, it's game over. And by the way, we're seeing it start already. Saudi Arabia sold oil to China in yuan this year. That's not a rumor. That's history now. People don't appreciate how psychological reserve currency status is. It's not a law of physics, it's a confidence trick. The minute enough people believe there's a better way, they'll switch. And then it accelerates because nobody wants to be the last bag holder of dollar-denominated debt when it collapses. And by the way, who's going to keep buying treasuries? Foreign holdings have fallen by nearly $2 trillion in 5 years. Even the Japanese and Chinese, our biggest creditors, are dumping them to defend their own currencies. That means the Fed has to step in and buy. That's how you get QE infinity, whether they admit it or not. And what does that do? It means more dollars chasing the same real goods. Higher inflation, a weaker dollar, higher yields to compensate buyers. It's a death spiral. Now let's tie it back to gold and silver, because this is where it all converges. You have an entire global monetary system that is built on debt. That debt is only serviceable at low interest rates. The only way to keep rates low in the face of inflation is manipulation. Either overt, like yield curve control, or covert through CPI lies. But eventually, reality breaks through. When it does, people run to the only assets that aren't someone else's liability. That's gold, that's silver. But here's the key. They're starting to do it now. You see it in central bank purchases. All-time records the last 2 years. You see it in sovereign funds, in family offices pulling physical metal off exchanges. You see it in premiums staying high even when spot prices get hammered. That's the physical market telling you there's a stress under the surface. Silver in particular is fascinating. It's always been the poor man's gold, the monetary metal for people who can't afford 1-ounce gold coins. But it's also a strategic industrial asset. You can't build solar panels, electric cars, advanced weapon systems without it. That's why the Pentagon has quietly stockpiled silver for decades. That's why in 1942, the U.S. passed S-2768, explicitly authorizing the use of U.S. silver reserves for war purposes. Back then, it was 100 million ounces a year. What do you think it is now with smart bombs, drones, and hypersonics? BlackRock's deep in this game too. They're custodian for silver, for gold, and they're also tight with the defense sector. Think about it. Keep silver cheap through paper suppression, buy it cheap to load into missiles, then when the dust settles, get the reconstruction contracts. That's the military-industrial complex blueprint. But it's starting to break. The sheer volume of physical deliveries is telling you something. May saw the largest silver delivery in COMEX history. We've had 25 straight months of massive drawdowns from registered stock. That's not retail buying. That's big money, big players who understand it's safer to own bars than contracts. And that's why I call silver the most asymmetrical bet of our lifetime. Where else can you buy an asset that's been suppressed for decades, is essential for the green transition, essential for modern warfare, and trades at a gold-silver ratio over 80-1 when it comes out of the ground at roughly 7-1? I'm telling you, when this thing snaps, it's going to melt faces. You'll wake up one morning and silver's up $5 overnight, and you'll hear analysts on CNBC saying, well, nobody could have seen this coming. Except we did. We've been talking about it for years. The people who've held through the frustration, through the volatility, through the endless price raids, they're going to be the ones who own the wealth when this system resets. The people who listen to the banks, who believe the ETF prospectuses, who thought their paper contracts were as good as metal, they'll be left holding the bag. So look, I want to close this out with something real. I know it's hard. I know watching these markets can drive you nuts. The volatility, the blatant price smashes, The mainstream headlines telling you gold's just a rock and silver's just for solar panels? It's enough to make you question your sanity. But that's the point. They want you to question it. They want you to sell your metal so they can buy it. The greatest wealth transfer in history is happening right now. From weak hands to strong hands. From paper to physical. From west to east. You don't have to be a victim of it. You can stand on the other side. You can be one of the people who owns real assets while everyone else holds IOUs that will never be paid. So please, do yourself a favor. Keep stacking. Turn off the news, take a walk. Stop looking at the daily tick chart. The big move isn't going to come with fanfare. It's going to come like every paradigm shift in history, slowly, then all at once. And when it does, you're either going to be positioned or you're going to be panicking. That choice is yours.